Wow, it's amazing that we're already at the end of the March 2017 quarter. And what a big quarter it's been. So clearly the markets have been strong again for the last quarter, and the rolling 12-month figures is a really good positive numbers, not only just in the Australian share market but also around the world. Clearly we've seen the first 100 days of the Trump administration, and the markets as a result so far have actually been quite buoyant towards his proactive business activities and those sorts of things. Some would say that that's an interesting scenario, given that given that his mannerisms and the way that he goes about things. But so far so good in relation to where the markets have gone. The reason that we're quite optimistic about the markets and those sorts of things is the fact that the fundamentals are clearly reflecting some positive numbers, and we're seeing some good numbers and growth numbers coming not only around the world but also in Australia. So the fact that there is potentially a bit of a Trump bubble as markets sort of ride the pro-business activities that he's announcing and those sorts of things, we do get some comfort, I guess, with the fact that there is some real strong financial numbers and trends going behind that. As you'll see, the Australian share market has been quite good over the last quarter, and most of the sectors in the report will show that we've seen some positive numbers. Clearly the one that has been dragging a little bit this one has been the telecommunications, but it has had a pretty good run, and that's just another illustration of the importance of diversification, because ultimately not all the sectors are going to be performing strong on a quarter by quarter basis. So that's why we're making sure we've got good diversification. Looking forward, clearly the upcoming months, there's some really big ticket items coming up. So we've got the May budget, which is clearly going to be announced shortly. The government seem to be changing their tactics a little bit in relation to the lead up to the budget, because clearly there hasn't been the noise or activity or leaking of information and ideas that there has been in previous years. So it'll be interesting to see whether it's just a bit more of a steady as she goes sort of a budget and implementing the tougher measures that they brought into place in the last budget, or whether they will pull a few surprises out. So it'll be very much a watch this space. Look, our view, I think, is that we will see pretty much the implementation of last time's budget. We're not expecting huge amounts of changes, because obviously there was some pretty big ones last time. This leads us to the changes that are coming in on the 1st of July. So if you haven't spoken to us already, there are some pretty big changes coming in relation to superannuation. So it is important to come in and have a chat or have a phone hookup or a Skype meeting, all those sorts of things. The major items to discuss are for those with balances over $1.6 million who are in pensions. So clearly there needs to be a couple of action items there, with balances above 1.6 million in pensions needing to be rolled back to accumulation. So that'll need some resolutions to be implemented to allow us to meet those new legislative requirements. Those in TTR pensions, there is some big changes there. So clearly the biggest change was the fact that the investment returns are going to go from a tax-free environment, as they are at the moment, into a 15% taxable environment if you don't change those TTR pensions. So there needs to be a conversation about the validity of keeping the TTR pension. So whether you do need the extra cash flow from the TTR pension. How the income and the pension is coming out hasn't changed, but the validity and the real benefit of the strategy of holding your investments in the tax-free environment has changed. So there might need to be an adjustment there. There's also potential to review whether you've met a condition of release, so that you can move your TTR into an account-based pension. So if you're over 60 and you have changed jobs, or you can change jobs, that's going to have potentially a good benefit on that tax environment and allow you potentially to keep that tax-free environment. So pretty important to get on the phone and have a catch-up before July, just to allow us to review where that's at. There's also the contribution limit changes. So non-concessionals are going from 180,000 after-tax contributions to 100,000 of after-tax contributions. So we really need to have a look at whether you've got the capacity to make extra contributions and the benefit to you in doing that. And likewise, they're changing the concessional, so the pre-tax or sacrifice contributions from 35 or 30, depending on your age, down to 25. So there is a window in the next couple of months to be able to take advantage of the higher limits before they do change. And for those who are in that bracket, we need to probably have a review in July to make sure that you don't go over the new $25,000 limit, because as we've spoken about before, going over the excess contributions is not a pleasant thing to have to deal with. In addition to the super changes, we're going to be seeing Trump, or he has announced his tax changes to America, and then moving very much from a global tax environment to a territorial tax regime. And I guess it's a fundamental shift in the way that they're going to be taxing not only individuals but also companies. It's a big play, because obviously when you cut tax rates, you're expecting to generate income from other growth and stimulating the economy and those sorts of things. So he's foregoing short-term income with tax changes for the longer-term benefit. And I guess what they're trying to do is pick up the more income tax at a lower rate and get bigger global companies to move their premises or maintain their premises in the United States. So it is an interesting strategy, and yes, the fundamentals of growth around the world are positive, but that is one thing just to have on the radar, that depending on how markets react, that potentially could be something that we might see a little bit of volatility as that rolls out. So clearly a few big ticket items as we come into the end of the year. And as always, there's always the end of year financial planning that needs to be taken into account. So look, as always, get on the phone, let's have a chat, and let's make sure that we're heading towards achieving your financial goals. Look forward to speaking to you shortly. Cheers.